What did you learn from the Fed today, and why did it move the markets?
Good morning, Dan. What I learned from the Fed is that they're still like a deer in the headlights, and they still have no clue of how to let a free market and a free economy trade. If we're looking at what is supposed to be a growing economy, and if jobs are as good as everybody says it is, and everything else is going so wonderful, then there should be no issue in raising rates. There is a demand for money, so we should be able to see higher rates, which the 10-year is showing you that rates are going higher no matter what the Fed does, but they continue to be a deer in the headlights because they're afraid to exit. They're afraid that the markets might sell off. And the markets, of course, love the free money. Cheap money is the best medicine for a stock market. It's just not the best medicine for an economy.
So I guess most importantly, when it comes to the outlook, what bearings do these latest minutes have on what the Fed's going to do in June and beyond? How are you reading the situation now when it comes to inflation and what the Fed is saying about inflation?
Well, the Fed is going to hike in June. Of course, that's already been pretty much priced into the market. Inflation, I'm not a big fan of the way that we calculate inflation because I know that my personal goods and services are going up every single day. So I don't understand why they say that we don't have enough inflation. I think we're well past their 2% based on my personal spending, and I think other people's personal spending, especially when you tie in, yes, the goods are volatile, goods and services. However, that doesn't change that I make X and now I'm paying more than X to have to pay my bills. So to me, they're letting the ball slip again, and they're going to make a mistake, which will eventually cause and create the black swan event in the markets. Now, right now, the markets are going higher. I see no reason to believe that that's going to change anytime soon. But when you watch the dollar continue to spike higher and you watch the 10-years that are continuing to go higher, that is not a good mixture overall when you look for what we can look for in the future, which we're due for a sell-off anyway, so this could be the fuel to the fire.